Prime brokerage business has really been one that's been expanding. There's a lot of growth. It's kind of a necessary part of the hedge fund or alternative business in terms of offering up leverage, helping folks cover shorts, and then all these sort of operational infrastructure that goes with it. You could argue that the operational infrastructure is kind of table stakes and been normalized, but as you've seen how firms have come out of this business, others have been scaling back a little bit, but some are going into it a little bit more forcefully. It is a capital-intensive business. As you mentioned, there is a risk to it. It's effectively a lending risk.
Yep.
So it's been good and it's been growing.
Now, back in my day, as it were, I mean, if I had 2 or 3 good years trading bonds or stocks or currencies, I could literally walk out the door, knock on your door or some other prime broker and say, hey, raise me $500 million or $1 billion or $2 billion, and I'd go hang my shingle out and take all the trading profits. Does that even happen anymore?
So I think that would be an exception to the rule. If
Okay.
you come from a very well pedigreed manager and you spin out and you get backing from that manager, it's a much more plausible outcome. But I think one of the differences today is that we see these multi-manager platforms that really have come into their own in the last few years. So if you were going to spin out rather than go out on your own,
Okay.
you may want to join one of these platforms instead.
So that kind of goes to the consolidation of this industry. It seems like, the mom and pop, the standalone hedge fund person with 2 or 3 billion, those are kind of a dinosaur. It seems like it's all Citadel, Millennium. You got to go into these big platforms, and that's not as fun, though, is it?
Well, I can't speak to the how much fun it is or not, but I will say that it's an easier entry if you want to not manage your own business, but get closer to managing your own business. In other words, it takes care of all the infrastructure needs, it takes care of the capital raise, and you can focus on probably what you do best, which is manage people's money.
When I left the sell side late 2004, I looked long and hard, because that's what sell side analysts, you leave, you go to a hedge fund, long short equity. Based upon my analysis, and I said, this game's played out, long short equity. There's no alpha left. Plus it's a young person's game. I don't know, but money's still flocking into hedge funds, isn't it? Talk to us about kind of funds flows over the last several years.
Yeah, I mean, they've had ups and downs. 23 wasn't the best year ever, but it was a good year. What we've seen from our seat and our client base, half of that money went to funds that are a little bit more established, meaning have been around 5 years plus. About 25% of the money went to folks between 3 and 5 years, and then the other 25% went to the what we call emerging manager space. But I think there's a lot more specialists today. So you're like a healthcare specialist, you're a TMT specialist. And when the allocators are looking where to put their money, they're making those decisions as to what market or what segment of the market would make most sense for them.
So what are some of the, where is some of the money going these days?
Well, without getting into specific names, but
strategies.
Well, so a lot's going, and most of it, as you mentioned, is going into these multi-manager platforms.
Okay.
Away from that, again, our perspective may be a little bit different because we do have, Jefferies obviously has a large healthcare banking business, trading business, so we do have a fair amount of healthcare funds on the platform, and they've done pretty well in terms of the capital raise this past year.
So, I mean, what are the big funds doing? Like, what's Stevie Cohen doing? What are the, I don't know, the Ackermans? Are they raising money these days?
I think, everybody's trying to raise money.
Everybody's trying to raise money.
And they're successful at it with, varying degrees. And I think for some of the larger folks that you've mentioned, it's more about product expansion. I'm not talking about the fund structure per se, but it's what markets are they trading in, whether in the US, Europe, Asia, emerging markets. You see a very sort of wide spectrum or diversification across a lot of those, and they sort of push and pull on the levers as market opportunities arise.
So what are I know some of the challenges, having spoken to some folks in your industry, the whole regulation reporting aspect for this business, it just seems to get more and more complex every time. How do you guys, or at a prime brokerage, how do you try to deal with that?
Yeah, to be honest, we try to alleviate or move some of that burden from our clients and put it on ourselves in terms of what we report, how we report. That's not going to be possible with everything going forward, so I'll just give 2 examples. One is the look to have potentially more transparency within the swap or synthetic or Delta One businesses. Yep. And some folks obviously don't love that idea because they may be doing it for trading anonymity. And then 2, sort of this Basel endgame, which terms may require folks to just post more capital, meaning the broker-dealers to post more capital. So the rules and the regulations are going to change the playing field sort of going forward.
Where does hedge fund money come from generally into the space?
Yeah, I mean, it's coming from family offices, it's coming from fund to funds, it's coming from pensions and endowments. And, I think we've seen recently where we've been focused a little bit more has been on the family office space. Sometimes they are willing to take a little bit more risk in terms of going with an unknown individual, or somebody they feel they may be more alpha getting in with somebody as they start up, as opposed to going with one of the more household names. But it's sometimes safer to go with the household name because everybody's in there.
So when you submitted your budget to your bosses this year for 2024, what are some of the growth drivers that you kind of laid out for them?
I mean, for us, we are looking to do more in the synthetic and swap space. We are looking to offer a little bit more across. We're pretty solid in the straight sort of equity space, but looking to do a little bit more within convertible bonds, a little bit more within the fixed income space. So I think for us, we're looking to broaden our product offering. And we've had good traction so far.
So, I mean, what's the competitive landscape here of this prime business these days?
Yeah, listen, there are 5 very large prime brokers.
So it's Goldman, Morgan Stanley, B of A, maybe, I don't know.
No, you're right. I just don't want to say competitor's name,
Yeah.
but sure, you're
so
absolutely right.
the bulge bracket guys are all in there for the most part.
Yes, but what could potentially change is if the capital requirements change, they may be more impacted than somebody like ourselves. And so I could see the landscape changing slightly over the next couple of years, and maybe the product mix and use of balance sheet and use of capital kind of changing along with it.